to me, are far more important than lines on the inside. You can see here that there is actually a rising channel going up from here, look, and going up through there. It fell out of there, but nevertheless, there is a resistance line there. Those are important on the day, but overall, the longer term, when it's coming up here, the longer term, you see these are outlaying areas. They're not contained within the normal day-to-day. Yeah, so they are more significant. And when you get a move from up here all the way down to here, then you're talking about over that's 5.2, that's 52, that's 68, that's 16,000 pips? No, 1,600 pips. It's quite a significant amount of money if you're trading that. So that's what we're looking for. So let me bring that back to current day and zoom in so that we got it back to where we had it. Okay. So on a current situation, we have a high, and we could say that this is almost contained within the channel again, isn't it? Probably, I'll show you how to put these on and take them off in a moment. Certainly that one across there. We have a descending channel basically, but it's bounced off somewhere around here and is heading back higher. Once this one is not so obvious, the bottom line, but this top one it certainly is. And if it comes up here and touches that line and starts coming down again, then obviously the longer it goes on, the more it would be a descending channel. If you want to go back further, because you zoomed out as we did, and that has gone to 2009. If, for argument's sake, the price action was up around about 1.7 here, and had touched that, and then was carrying on higher, I might tell you a high that was prior to 2009. You say, well, hang on a minute, my charts don't go back that far. Yes, they do, but you have to go to the weekly. And if you go to the weekly and then zoom in from there, that has now gone back to 1994. All right, and that, yeah, you can see there's the 2 to the pound, and you can see in the 6 months it took 6 years for it to get to there, and it took 6 months to come down from 2.1 down to 1.36, something like that. If you wanted to go back further, then you could go to the monthly chart. And in actual fact, that has only gone back to 1995. And so it depends on what platform you're on. Some platforms will go back to 76. But I mean, that's 94. You've still got, a long history there. So that's more than enough to be going on with. So that's how you find the points at which I might say, look back to, that's where it's likely. But I'll tell you the level and you can draw your line across. If you're on this chart and you wonder how you want to get above here, I don't know if you know this, but if you put your cursor on the right-hand column there and click it and then hold it and drag it, you can actually bring this right down, so you can go up to 2 if you want to. Look. Yeah, so if it was up here somewhere, you could actually see it. It makes a bit of a mockery of here, but you see how you can actually use it to find levels above there, for instance. Okay, that is historical data. So we're looking at historical data on a fairly frequently basis. Historical data at the moment, this is moving up. Historical data at the moment, when it's moving up, is not really significant on this at the moment, other than for the last few weeks. It's got to get above here before you start looking back at historical data long term. Yeah, because it's got to get above here before the long term becomes significant. If it turns around here and starts coming down here, then the historical data are the lows that it established on the way down. Sorry, on the way up before. Yeah, but more importantly, these lows, the major lows, where it went from here all the way up to there. That is significant because everybody knows that that was a significant day where it stopped, because that's a bottom. Now you can have double bottoms, treble bottoms, and so on. But if a market has touched a point twice before and it's coming down, then you're looking for a treble bottom, because it's done it. You've had a double bottom. A treble bottom is where it touches it 3 times, and so on. Yeah. The more touches of a line you get, the more likely likelihood there is of a breakout, because people are waiting for it to happen. So if you get 4 or 5 touches particularly, then you need to start being a little bit concerned, because it will break through at some point. But with our methodology, you're waiting for that breakout anyway. The methodology won't allow you to trade it anyway, probably. All right? But as I say, we'll deal with that later. So that's historical data. Toolbar operation. Most of you know the toolbar, so I'm going to flick through this fairly quickly. But it will be, don't think that you're going to get left behind, because in the trades later on, we will be using the toolbar quite significantly anyway. Let me just take these off here because they shouldn't be on. Well, I can show you how to do that, can't I? If you draw a line on a chart, any line, what you need to do is to put your cursor on the line. Let's get rid of that moment. Put your cursor on this line here, you see, this one here. You want to get rid of that line because it's no longer viable. If you double left click on it, you will see, if I zoom in, hopefully. Yeah, press you in. Will you? That is not coming up very well. I don't know whether you can see that, guys, but there are little squares at the ends of the line once you double click on it. And if those little squares are there, when you put your cursor on and right click, you will be able to change the trend line properties of that line. So you could change the colour, the thickness, or you could have a broken line or whatever. But more importantly, there you can actually delete it. So if you just click on there, that line then disappears. On this line here, you can see those better there. See those little squares? If those squares are there, if you right click, you can now delete it, and so on. All of the lines on here, whether they be vertical lines, horizontal lines, for instance, if you put a horizontal line on there, put your cursor on, double click, you get the little squares. Once the little squares are on there, by the way, you can actually move that line anywhere you like. You can drag it. Do make sure that when you put a line on your chart, those little squares aren't there, because if you run your cursor over it in the future, you might well move it. And you might just place a trade on the basis of a line that shouldn't be there. Oh, it's beautiful. Now, yes. All right, so those are those. A is for text. And if you go onto the text box and bring it down, where that cross and ABC is, whatever you put there will be where the cross is in terms. So if you left click now, right, you get a text box, and whatever you put the text, or whatever you put in the text there, any gobbledygook or whatever, it will be at Arial black, size 12 in red, and you can change that to whatever you want. And there is your gobbledygook there, or your comments. You could put entry, exit, stop loss, all sorts of things right on the screen. When you do that, double click on it, get the box around it. You can then move it anywhere you like, or you can right click and delete. Okay, so that's the alphabet and text. Text label, I don't use that at all. The arrows and so forth, those are quite useful if you want to just put where you actually got in or something. And to use the arrows, by the way, you do need, on the arrow properties, you do need to use this line here to the maximum thickness. That's how you get the biggest arrow. Otherwise, if you use the little line, you only get a little arrow, you see. Once you've got the box round, right click and you can actually delete it. So those are the arrows, right? So that's that. I've told you the plus and minus. The chart shift is a means of getting this space here from the end of the chart, otherwise you've got nowhere to write. So that chart shift is quite useful. That's where it would normally end up, but if you chart shift then it comes out here. I don't know if you can see it, but there is a little triangle there. If you put your cursor right on that and move that triangle across, that is where the end will come basically. So if you only wanted half the screen and you wanted all this black, you could actually move it across there if you wanted to. Don't know why you'd want to do that. The chart shift is very useful because if you want to scroll back to somewhere and you've scrolled back quite a long way and you're looking at something here and you want to get it back to present day, just press the chart shift and it zooms back, all right? But that will only happen if you've got the auto scroll, which is, oh, that one, auto scroll off. Because if you've got auto scroll on, when you scroll back and leave it, it will he said. All right, prove me wrong. It does actually fly back when you don't want it to. Anyway, probably was a knot off before. So that's the auto scroll. We know where the daily ones are there. Yeah. We've done the crosshair. The new order and so forth up there, and the new charts and everything else I will do after lunch with you when we look at some of the trades.